That's a great question because the guide we're giving away this month is balancing asset protection and avoiding estate taxes. It talks about portability, the pros and cons of electing portability, which is exactly the exemptions dealing with the unused exemption of this first spouse to die, which is what we talked about earlier when Chuck asked the question. It talks about a revocable trust and all three of these buckets, how they're funded, how they're designed, and you could put your own numbers in and see what tax liability you would have. It also then breaks down into a smaller section dealing with irrevocable trusts and how the marital shares and remainder shares work in those trusts to shelter estate taxes and at the same time protect it from the nursing home. So I think you'll get your answers. A little something for everyone in this guide, folks. Well, it kind of a function. It's a great question because gifting requires a little bit more of an analysis. So let me just ask you a question. In terms of your overall estate, real estate, money, IRAs, investments, life insurance, death benefit, give me a round number. What do you think you're worth? Okay, million each. So obviously you're way below that number. So the first thing we would say is there's no tax reason for me to make a gift to save federal estate taxes because I'm way under it. So that 40%, not an issue. Massachusetts, we turn our attention back to that and saying, well, if we go over the 4 million, let's say we're at 4.5 million, well, the tax will occur on the amount over the exemption. So, yeah, we could have some tax there. The next question would be, what's the rate? Well, yeah, it's about 10, 11% on the amount over the exemption. Okay, well, if it's 500,000, it's, 50 grand. Yeah, it's taxes. I don't want to pay it. I get it. But is it worth it, right? Is it worth it? Now, for the $19,000 a piece, I assume you're giving away, would it be cash you're thinking about giving?
Yes.
Okay. So then if it's cash you're thinking about giving, you're giving it and it's not going to cause a problem at all, okay? Why it's not going to cause a problem is because cash is cash and there's no built-in gain in the cash because you have to think about capital gains tax when you make gifts and gift tax, okay? So, and estate tax. So since you're, at that realm, if you're giving away the cash and it makes you feel good, again, I get it.